For those of you invested in the market, September has been tough sledding. But this should come as no surprise, as the month of September has been the single worst trading month of the year. Dating back to 1928, and that is a long time ago, the S&P 500 has lost an average of 1% during this month. As of this filming, the S&P 500 is down 1.5% this September. With only a few trading days left in the month of September, we pretty much have this month behind us. And on a positive note, the fourth quarter is the single best quarter of the year, with the S&P 500 progressing each and every month to close out the year on a high note. Now, of course, these are all based on historical figures, but let's say it happens, and let's try and be positive as we close out the year on a positive note. On average, the S&P 500 increases 0.5% during the month of October, and it increases in November and again in December to close out the year on a high note due to the holidays. With that being said, I've done a ton of research lately, and in today's video, I'm going to give you 4 of my top stocks to buy in the month of October. Let's check them out. Hey everyone, Mark Rusin here, and welcome back for another video. If you're a returning subscriber, thank you. If you're new to the channel, hit that subscribe button so you'll be notified anytime we drop a new video. Before I jump into the first stock, could you do me a huge favor and hit that like button down below, as it is instrumental for the growth of this channel moving forward. As a quick disclaimer, although I'm a CPA, the content covered in this video is for informational and educational purposes only. So please perform your due diligence before investing in any stock. Okay, let's jump into my 4 top stocks to buy in the month of October. The first stock to buy in the month of October is Google, or Alphabet, stock ticker GOOGL. Alphabet is so dominant when it comes to search that they are number 1 and number 2 in the world. Now that's not some cheesy joke. They are in fact, Google search is number 1 and YouTube is number 2. The company continues to see a rise in search as the global economy returns to a sense of normalcy post-pandemic. Now we still have a long ways to go, but based on the results, things are returning to normal. When it comes to Google, rising search number or improving search numbers leads to higher ad dollars, which is a key revenue driver for Google or Alphabet. During the company's most recently reported quarter, Alphabet revenues climbed 62%, with the Google services sector climbing 92% year over year. YouTube, which we know you and I enjoy, considering we are both using the platform right now, saw higher revenues and the most ad dollars paid to content creators in the history of the company. All in all, this digital way of advertising is here to stay and is going to continue to increase in popularity in the coming years. Looking at shares of Alphabet, the company currently trades at $2,723.63. Now, before we go forward, you may be telling yourself or asking, Mark, this is a steep price to pay per share. But don't get so caught up with the share price, because in today's day and age, you can buy fractional shares. If you have $500 to spend, you can invest $500 in a share of Google. If you invest, say, $500 into a $100 per share stock, you would get 5 shares. Now, if you invested that $500 in a company whose share price is $500 as well, you would get 1 share. Now, you may be thinking to yourself, well, it's so much better to get more shares. Isn't that the idea? Not exactly, because it's all about how much you have invested. If a share price goes up 5%, whether it's the $100 per share price or the $500 per share price, your amount invested will increase 5%. Over the past year, shares of Google are up 95%. And the company has a market cap of $1.9 trillion, knocking on the door of the $2 trillion market cap club. According to 35 analysts, Google is expected to see revenues climb to $292.2 billion next year, meaning on a forward-looking basis, shares are trading at a price-to-sales ratio of 6.3 times, or on a forward enterprise value to sales ratio of 5.8 times. Now, I consider this to be a reasonable valuation considering Google is expected to increase revenues 35% in the coming year. Looking at the analysts on TipRanks, they have an average price target of $3,200, implying an upside of nearly 20% for shares of Google. The second top stock to buy in the month of October is Roku, a stock I love. And again, this is also touching on this digital advertising transition that we just spoke of when it comes to Google as well. As many of you know, the world of streaming has evolved immensely over the past few years. And long gone is the way of traditional cable, where you just have one cable provider and that's the only way you watch television these days. No, fast forward to today, and almost every major cable company, satellite company, movie studio, any media content creator out there pretty much has their own app or streaming app. You have Netflix, Disney Plus, Hulu, Amazon Prime, Peacock, just to name a few. Now, there are a slew of reasons to be excited for Roku long term. And we touched on the digital advertising side of things, but the company is also a data machine. AI and data machine learning capabilities through the Roku devices make it a prime prospect for companies looking to get their products or services in front of the right eyes. Just this past week, Bank of America analysts came out and reiterated buy on the shares of Roku with a price target of $500, implying an upside of 60%. Looking at shares of Roku, the company currently trades for $310.57. Over the past year, shares are up 76%, but off 35% from their recent 52-week highs. Roku has a market cap of $43 billion, and according to 23 analysts, the company is expected to see revenues climb to $3.9 billion next year, meaning on a forward-looking basis, shares are trading at a price-to-sales ratio of 11.4 times and on a forward enterprise value sales ratio of 10.5 times, which is reasonable considering the company is expected to increase sales 65% from current levels. Looking at TipRanks, analysts have an average price target of $475, implying an upside of 50%. The third top stock to buy in the month of October is one of my favorites, CrowdStrike. Now, if you're not familiar with CrowdStrike, they are one of the leaders in the cybersecurity sector, which has been huge and never more important than it is today. Damages from cybercrime are expected to hit $6 trillion in 2021, essentially doubling over the past 5 years. Last year alone, there were some 65,000 successful breaches, which led to an estimated $350 million in ransom payments being handed out. When it comes to a company like CrowdStrike, it's not so much focused on how many customers can you get, it's how many customers can you attain. So when looking and doing your due diligence on CrowdStrike, you want to look at what's called ARR, annual reoccurring revenue. It's getting those customers which you can keep and they pay a long-term subscription, which gives you that reoccurring revenue each and every month. During the company's most recent quarter, the company reported an uptick of 70% in annual reoccurring revenue, which is awesome and a key factor on why I am excited about the company moving forward. But I should caution you, the company comes with a high valuation, which leaves very little room for error when moving forward. Looking at shares of CrowdStrike, the company currently trades at $241.86, and over the past year, shares have risen 85%. The company has a market cap of $59.7 billion, and according to 25 analysts, CrowdStrike is expected to see revenues climb to $1.9 billion Next year, meaning on a forward-looking basis, shares are trading at a price-to-sales ratio of 28.2 times and a forward enterprise value sales ratio of 27.9 times. Now again, the valuation is much higher than these other stocks that we've mentioned today, but at the same time, revenues are expected to increase 70% year over year, and that annual reoccurring revenue is one reason why the valuation is so high. But it's a revenue target that I believe the company can attain because I do not foresee ransomware attacks slowing down anytime soon. Looking at tip ranks, analysts have an average price target of $315, implying an upside of 30% for shares of CrowdStrike. The fourth top stock to buy in the month of October that I will leave you with today is Airbnb, stock ticker ABNB. Now this company, as you may already know, is a disruptor in the hotel, leisure, or hospitality sector. You may have already used their service before, but if you haven't, it is a very seamless and easy to use system. You can just use it straight off your phone. You can communicate directly with the owners or the property managers of the property that you are staying at or potentially staying at. Being a shareholder of Airbnb has not been as seamless, as the company IPO'd in December of 2020 at a price of $68, and after the first day of trading, the company closed at $144 with huge upside. After that first day, shares plummeted before skyrocketing to $220 in February, but since then retracting once again. Investing in Airbnb takes a ton of patience, as it is a pure play, reopening play. It is estimated that we will not see travel spending fully recover until 2024. Now, like I mentioned with CrowdStrike you want to look at annual reoccurring revenue, or ARR. But when it comes to hospitality or looking at hotels or Airbnb, for instance, you want to look at ADR, or at least this is one metric you want to look at, which stands for average daily rate. This is the average rate that a company is collecting, or Airbnb is collecting for their room on a daily basis. But let me pause here because I want to caution you. Airbnb is a high beta, very volatile stock, meaning that when the S&P moves one way or the other, more likely than not, Airbnb is going to be much more volatile. So when the market, if we see a market-wide sell-off or a mini crash, Airbnb can see major downside. But at the same time, the upside can be very swift. Looking at shares of Airbnb, the company currently trades for $168.58. Since going public, shares are up roughly 150% from their IPO price, but they've roughly been flat over the past 6 months. Current levels look intriguing, especially considering shares have pulled back nearly 25% from those February highs of $220. Airbnb has a market cap of $108.9 billion, and according to 36 analysts, Airbnb is expected to see revenues climb to $7.1 billion next year, meaning on a forward-looking basis, shares are trading at a price-to-sales ratio of 14.2 times and on a forward enterprise value ratio of 14.1 times. Analysts expect revenues to grow 61% by the end of next year, and TipRanks analysts have an average price target of only $178, implying 6% upside, but that is slightly swayed due to some low price targets that I do not entirely agree with. The highest price target is seeing shares returning to those $219 levels we saw in February. So there you have it. 4 top stocks to buy in the month of October. You have your mega cap stock with Google, who dominates search with Google Search and YouTube. You have Roku, who's a leader in the digital advertising and a data conglomerate. You also have more higher growth stocks, I'll call them, but also higher valuations and high beta, meaning they can be a little bit more volatile. But CrowdStrike is one of my favorites, being a leader in the cybersecurity space, and with ransom attacks on the rise, I don't see those slowing anytime soon, making CrowdStrike a solid investment moving forward. And lastly, Airbnb, who is a disruptor in the hospitality sector and a pure play on a recovery that is taking place right before our eyes in travel. I hope you enjoyed the video, and if you haven't done so yet, please hit that like button, as it is huge for the growth of our channel moving forward. In the comments section below, let me know a few stocks that you're looking at purchasing here in the coming months. And with that being said, I will see you next Wednesday. Take care.